Okay. Here we go. Bam. Welcome back to Game Trader Live. This is our August episode. We do one of these at the end of every trading month. So the last day of the trading month is what triggers this show. So it's happened on a few Fridays. It's not always going to be on Friday because sometimes the month ends during the week. So here we are, though. It is Friday, August 30th, the last trading day of August, which means there's only 4 months left in this year, which is pretty wild. Of course, my green tea's like perfect temperature to drink right now, but I have to sit here and talk to a bunch of people. I shouldn't say a bunch of people, a handful of people who make it to the stream, and then whoever's watching it on YouTube later on the VOD. But yeah, I didn't really plan for much this week because, I don't know, I'm busy. Got stuff going on. But I figured we'd look at some charts, and I'm going to start with the NASDAQ 100. Bam. So you can see me, I'm still in the bottom right, in case you missed me. No real signal on the monthly chart to end the month of August for the NASDAQ. Although, quite the comeback off the lows. I guess the weekly chart would probably show that better, yeah. So it's been a volatile couple of months for the NASDAQ 100 and its components. Obviously, you had NVIDIA reported earnings this week. You had an outside week to the downside when it broke below 123 and 10 cents this week. Not a huge amount of selling showed up. If you look at the day, yesterday it traded 452 million shares. The day before it was 442, and today it only traded. I shouldn't say only, but it traded 278 million shares today. Did have an inside day to end the month, so if you want to pay attention to NVIDIA next week, you want to sell it, or there would be a sell signal below 117 and 22 cents per share, and a buy signal above 121.75 cents. That would only be on the daily chart, though, so you could day trade it on Tuesday. A reminder that Labor Day is on Monday, so the stock market will be closed, which means one less day for options to trade, one less day for the stock market to be open. So we'll have to keep our eye on NVIDIA. I think it's one of the most important stocks in this entire market. It's kind of at the center of the AI revolution and all that stuff that's going on. So I posted a thread on our Shack News community, the chatty, and didn't really get a whole lot of questions this week. We did get one from Sharif asking about Dell. He says he's been selling calls on Dell, and he's keen on selling it around 160 a share. Let's take a look. Well, if he's selling the 160 calls, it's only at 115 right now. That's not the worst idea. You'd be up $45, and you're taking in premium to do that. I can get behind that. It's not the worst idea. On the weekly, it looks kind of similar to that rally we had in NVIDIA off of the lows a few weeks ago. But yeah, this thing probably has more upside left to it just on the chart. Let me take a look at the fundamentals. Let's see what we got going here. Why did Yahoo Finance in Canada show up? I don't know. $81 billion company, trailing PE of 21, forward PE of 14. Not bad. Trades at a discount to its overall sales. They have revenue of $91 billion per year, and they're trading at less than that. Their margins are pretty terrible, only 4.3%. They have a decent amount of debt. $4.5 billion of cash, $24 billion of debt. Um, yeah, they're not that profitable. It's not that they're not profitable, and I think they just reported what, yesterday? Let's see if I can find the report. Let's see. Yeah, their revenue beat. Server sales were up 80% year over year. So yeah, if you're in the data center business, you're doing pretty good right now, depending on what you're offering to your customers. So yeah, there's the Dell chart. I guess it has more legs to the upside. Let's look at the monthly, see if there's anything there. That's a hammer. So you had an inside month and down, followed by a hammer. Uh, so if this thing can get above that outside month, or sorry, that the sell-off month of July, that's 150. That's a ways ahead of us here, but yeah, I would keep an eye on it. Daily, you had an outside day to the upside with a doji on the day, which means that they're trying to reach equilibrium. Let's zoom out. It's up on the year. It's not up on the quarter. It's up on the month. It was up on the month. Up on the week. And yeah, it was up on the day, barely. So not full time frame continuity. So above that 150 level, you might see some more buyers appear, and I know that seems like a ways out, but the stock was at 150 just about a month and a half ago, so it's really not that long ago. I think Sharif also in that thread brought up a point I think I'd like to address. He said, "Seems like tech's not completely dead, but there seems to be pricing pressure on discretionary spending. I wonder how long this lag will exist between the B2B world and the B2C world. So basically, business to business versus business to consumer. You're definitely seeing, I think consumption is starting to dry up in specific areas. I think what's different about this era right now is most of these companies that are Dell's customers, they're still ramping up spend on data center, on accelerated computing, and on their training networks for large language models or whatever AI things they're trying to do. So in that respect, like, it feels like we're still a few years away from the capital expenditure cycle ending, based on what I heard on the NVIDIA call this week, but also just all the other anecdotal evidence we're getting from AMD or from MongoDB or from Dell. It does not appear that the large players in AI are backing out of it yet. That doesn't mean that people aren't skeptical of it. I think there's a lot of people who are asking good questions about the profitability of artificial intelligence services and software. So Microsoft, on their most recent earnings call, said that it could take them 15 years to recoup the capital expenditures that they're putting forth for their AI efforts. They're really one of the only companies to mention that. Jensen Huang was asked about that on the NVIDIA conference call. He kind of dodged the question several times. Also kind of pivoted away from just saying that, hey, we're training all these LLMs, to really focus on this concept of accelerated computing, which I actually think is probably going to be a valuable thing. Turning our computers into terminals for faster services that exist in the cloud. That's been pitched to us for years, but I think NVIDIA is actually working on making chips that are more efficient and better at doing that. So I think that's the value that you can see in this industry right now. On the other side, when you listen to what Facebook's saying, or you listen to what Microsoft's saying, or what Apple's going to be saying, I'm not entirely sure how we're going to be making, what the profit margins of these AI services will be. We know that OpenAI is still running at a loss. So yeah, I guess the question is, like, if all these AI tools are so great, why aren't they making any money? And why won't they be extremely deflationary to overall society? But yeah, let's take a look at the broader Nasdaq. Or actually, we already looked at the Qs just for a hot second. You got another inside day here. So you can watch on Tuesday for a break above 476.90 and a break below 470 and 51 cents. On the weekly chart, just a bunch of twos, nothing staying inside. Hell of a comeback on the month though. So we're gonna watch the August highs for a breakout back. See if we can test this all-time high of 503 and 52 cents. That was hit in July of this year. But yeah, the Nasdaq, they call it the Magnificent Seven or whatever now. But yeah, Apple green on the month after some selling. Let's see who else. We got Google red on the month. Got an antitrust lawsuit coming at them. Yelp just sued them too. So they're probably the one of the Magnificent Seven that I would like strongly avoid. Because yeah, they're in the middle of the regulatory crosshairs right now. Let's see who else. We mentioned this on the last. This isn't one of the Magnificent. Let's stick with the big tech real quick. Meta barely up on the month, also kind of a doji. Microsoft red on the month. Their quarter wasn't bad, but the reaction to it was. You got Netflix trading here at 700 outside month to the upside, so you want to watch a breakout above 711.33 cents. This looks like it's the all-time high right here, though. So, I guess the question is Netflix about to break out, or is this a slightly higher high, and then boof back down to the lows? We'll have to see. It's just from a fundamental standpoint. They seem to be executing very well, but yeah, this is a high flyer right now. We mentioned Nvidia. They reported down or up on the month, a little kind of barely, red on the quarter, and also trading inside quarter. That's going to be something to watch into the end of September, because we could have a buy or a sell signal for the rest of the year in this stock. I own this stock. I have some call options that are probably expiring worthless next week. But yeah, Nvidia's, you have to pay attention to it. It's one of the largest stocks in the world, and honestly, I think it's more important than some of these other trillion-dollar companies. I skipped over one of them, Amazon. Red quarter, red month. So we're seeing a bit of a conflict here among the large cohort of they're called the Magnificent Seven. At one point, they were called what was it? Fang. But yeah, there's all sorts of companies that they kind of group in these momentum stocks: Apple, Facebook, Amazon, Google, Microsoft, and then to a lesser extent like Nvidia, Netflix, Tesla. Speaking of Tesla, Tesla red on the month. Red on the year, trading inside year. If you're wondering why your trades are not working in Tesla, well, there's two reasons. Elon Musk is a douche nozzle of galactic proportions, but also you're trading inside year, and you're just going to get chopped up. You're going to want to watch for where this thing closes into the end of the year. But yeah, on the quarter, it's slightly up. On the month, it's red. On the weekly chart, we're talking about a red stock here. And there's a downtrend in place. You can see it. It tried to break out above this downtrend. It's still trying to. But it's looking pretty bad. It looks like this area right here was a failed attempt at breaking out of the downtrend. But it seems like the bears are still in control of this stock. So I wouldn't buy it. I would avoid it. And it's probably not going to be in that $1 trillion club for much longer if they keep acting the way they are. It's important to pay attention to the volatility index, which had a spike a few weeks ago when the Japanese market crashed. So yeah, you have this very strange looking monthly chart here. Uh, yeah, this is a inside month followed by an outside month followed by a breakout above the outside month where it screamed. If you bought the VIX on this, you could have bought it at 1936, and then, who knows when you would have sold it, but it got above 60. So that was a 300% gain in like a week, if you were trading volatility specifically. Now, volatility is how they price the options on the S&P 500. So if you're wondering, like, what is the VIX, it's basically one of the factors in how they price options, the insurance on the S&P 500. Why do people always call me during the stream? And can phones have away messages? Like, I know this is a bit of a non sequitur here, but AOL Instant Messenger had these things called away messages where, like, someone would message you and you would reply automatically saying, hey, I don't know, what were people doing in the 90s? I'm watching Darkwing Duck, right? So, like, if I wish iPhone had that, where like I could just put some sort of away message on that says, hey, I'm streaming, and then maybe people wouldn't call me. I doubt it. A man can dream, though. Donovan mentioned in the chat that Netflix is dropping the next and final season of Stranger Things next year. I don't know how much one show affects Netflix anymore. Now, Stranger Things is a huge show. I'm not saying it's not huge. But, they have Cobra Kai. They have, Stranger Things. They have WWE is going to be ramping next year. I believe the WWE Raw, Monday Night Raw, is going to be on Netflix next year. So they're doing some stuff not just in streaming, but like live streaming, which I think is pretty interesting. So if they enter sports in a bigger way, maybe the stock can go higher. I do think it's interesting though. You look at this chart, and now let's look at Warner Brothers Discovery. So there's Warner Brothers, there's Netflix. Warner Brothers, Netflix. So I definitely would rather own Netflix. It seems like they're executing far better than most of these also rans that are trying to catch up. The Paramount stock chart doesn't look much better. But yeah, Paramount versus Netflix. Netflix is clearly winning, but I just don't know for how much longer. I think if we are, I don't know if we're entering a recession or not, but if we are entering a weaker economic period, it stands to reason that people would be canceling some of these subscription services or prioritizing some of them over others, or maybe just scheduling like, hey, this show's coming out this month. I'm going to be a Netflix sub for a month, and then I'm done watching Netflix for a month, so I jump back over to, I don't know, Peacock or something. So it'll be that's gonna be an interesting stock to watch next year, I guess. Netflix, uh, very easy inside year and up buy signal. So this is going to be one of those stocks where you could really highlight time frame continuity. It's up on the year, it's up on the quarter, it's up on the month, it's up on the week. Inside week, by the way, so we have something to watch here for next week. It would be a buy signal above 707.89 and a sell signal below 677.10. And then, yeah, it was up on the day also. That's time frame continuity. When a stock is going up on every time frame, it means that basically anyone who has put a short trade on this in the last year is in pain today and all year. So, yeah, I think the pain could continue in Netflix for shorts. I would not short it. It's not necessarily the cheapest stock, though, if you want to talk about the fundamentals of it. We can take a look at some of those. But I guess the key is that they're doing this at a profit where a lot of their competitors aren't. The streaming, they've been able to maintain profits while expanding their first-party content, that they have, and then also investing and expanding, also raising the price of everything. So yeah, it's trading 8 times sales, 36 times forward earnings, 43 times trailing earnings. That's a 1.7 peg ratio. It's not cheap. It's not cheap. Netflix is not a cheap stock, but it's not cheap for a reason, because they've done a good job executing, and their competitors are kind of pooping their pants right now. So yeah, it wouldn't surprise me to see Netflix go higher, but at the same time, we are very close. You know, it's similar. It just wouldn't surprise me if we see some consolidation after this monster move it's had over the last 2 years. But yeah, on the monthly chart, you have an outside month. I think I mentioned it. Yeah, it's a buy signal. Actually, I didn't mention this. Outside month, because here's the previous month of July had a range of 697.49 to 617 for the low. This month, August, we saw it dip below that to 587.04 and up to 711.33, which is the all-time high. So you want to see a breakout above 711.33, a convincing one, and that would be a buy signal for the rest of the month of September, and a sell signal below 587.04. So it means we're closer to a bias signal on the upside than we are the downside. And just to remind everyone, you already have an inside year and up buy signal in this stock above $500.89, which was 2023's high of the year. So inside of the previous year, and then it broke out above that. So that's one to keep on your radar, honestly, because when there are daily buy signals or weekly buy signals, well, this thing's already up on the year. So this is honestly a stock that I'm gonna mark down. I should be looking at day trading opportunities in this stock when it breaks out above the all-time high, which would be 711.33 per share. So that would be the price to watch next week, and also next month, for a potential confirmation of that existing inside year and up buy signal. Definitely one of the better looking charts in this market right now is Netflix. Let's see. Let's take a look at Apple on the month. Green on the month. Apple heading into September with a. Are you talking about? Sorry, RMS. Are you talking about Netflix? I'm not trying to predict anything here. It's important to know, like, what I do is I give you two numbers most of the time, and I say if it's a buy signal above a certain price and it's a sell signal below a certain price. So in the case of Netflix, what I was saying is that on the week, it traded inside of the previous week's range. So a break below 677.10 would be a sell signal on the week. A breakout above 707.89 would be a buy signal for the week. That would only be a valid buy signal for the 4 trading days of next week. But on the monthly chart, you see it traded outside of the previous range. A breakdown below 587.04 would be a sell signal, and above 711.33 would be a buy signal. So my point is that I am not trying to predict what's happening. I'm saying if this happens, then this will happen. But I'm also looking at existing evidence that we have that this thing traded inside year last year and it broke out above that. So we have a very long-term buy signal in this chart already. So what you're looking for is confirmation of that. And I think next week could give us that. So I'm going to be keeping up. Let's see how do I ban this person? Spammer be gone. There you go. I don't need your cheap viewers. I like my high quality viewers. So yeah, I'm never gonna tell you like when I'm looking at a chart, I'm never going to tell you where it's going. I'm going to tell you here's the situation on both sides. Here's what the computers who control the market are looking at. But no, I don't do price predictions based on technical analysis. That being said, I do use fundamental analysis in my reporting and also my analysis of stocks. So I look at the underlying price to earnings ratio, price to sales. I look at their trend and how their earnings are going. What are their margins? So I do look at those things. And from that standpoint, I don't think that Netflix is very cheap at these valuations. I wouldn't buy it. But I'm wrong, or at least the stock market is telling us, hey, this is the one to own. Right? Because you're like, here's I was showing this before, maybe before you got here, but here's Netflix on the monthly chart. There's Warner Brothers Discovery in the same time period. There's Paramount. There's Netflix. So clearly the market is saying that Netflix has won. But I don't know if I would chase it here. But I do think it's more interesting from a trader's perspective than an investor's perspective here. And this show looks at things from both sides. There's trades out there, and then there's investments out there. I don't think Netflix at 700 is that great of an investment idea. But this is a problem. I'll be honest with you. This is a problem I have every week now. I don't see many stocks that I want to buy at all. And when I do see them, boy, you want to see some of the worst charts on the planet? Go look at my speculative portfolio. So let's full disclosure, I own these stocks. I'm not telling you to buy them. Do your own research, consider your own risk tolerance before this, but here are some of the stocks that I've been buying. Oh wow, thanks AK Gamer. Let me hurry up and ban you too. There we go. So this is iRobot. This was a stock that was supposed to be acquired by Amazon, and they got hosed big time by the EU that blocked the deal. So I don't know how this was a stock that Amazon was acquiring for almost $50 a share. It's sitting there at $7.41 right now. If they don't go bankrupt, I think they're actually quite interesting at this price. So it's like, this is the problem. Like, the stocks that I'm interested in all look like this. Their charts are terrible. There's no reason to buy this chart. There's no reason to be a hero here. It is trading inside quarter, finally. So maybe it could find some sort of equilibrium down here. Red on the month. Obviously red on the year. So there's no real reason to be buying this from a chart standpoint. Inside week. So there's that. Outside day. But yeah, there's no continuity whatsoever on this chart. So this is an example of why, like, while I am going to sit here and talk about technical analysis, I will sometimes just buy a stock because I think it's an interesting story, or I think it's a chance of a short squeeze, or I think there's a chance of them being acquired, or maybe even just turning around the company themselves. So another one is GoPro, which also looks like complete dog shit. There you go. GoPro stock peaked at around $98.47 back in 2014. Currently trading for $1.28. So you'll see a lot of charts that look like this, where some of these stocks peaked in like the 2021 era of the lockdown, and then they all kind of unwound. So another one in this cohort that I would consider, I own, like I said, I own these, is Teladoc. Teladoc peaked at $308 in February of 2021. It's currently trading for $7.19, around $1 billion market cap. They're one of the leaders in telemedicine, so like teleconferencing with your doctor kind of thing. I find the stock interesting, and during the pandemic, you saw how much more valuable it was than it is now. I guess people like going to the doctor's office. I still think there's a secular shift that's going to occur away from inpatient office visits towards telemedicine. Problem here, I think the biggest problem with Teladoc right now is they face like a lot of competition. Cleveland Clinic spun up their own version of it. Like, so you're seeing, instead of companies just licensing Teladoc tech and, you know, putting a wrapper on it or something, you're seeing a lot of hospital networks just straight up build their own internal web thing. So I think that's the risk to Teladoc, but they do have a partnership with like CVS on the Minute Clinic. So yeah, this example of 3 stocks that I find interesting, but they're all terrible looking charts. Just for a refresher, I'm talking about GoPro. I'm talking about, what's the other one? iRobot. And I was talking about Teladoc. All these are stocks that were once high flying that are really struggling right now. So I am paying attention to them. But to that point, like, I really don't find many stocks to be interesting here. And like, I'll just point at Apple. Like Apple, for instance. Let's take a look at some of their metrics and why I don't think it makes sense to buy it here or even hold. I don't even know if it's a hold anymore. So yeah, Apple is trading at 30 times forward earnings. That's a 2.2 PEG ratio, which means that's optimistic. But to trade at a premium to your growth rate, they're trading at 52 times book value, which is the highest they have ever traded on that metric. Now, book value when it comes to tech companies is not the best way to value them because they have a lot of intellectual property and various things that you would have to factor in. So I don't necessarily think book value is the reason I wouldn't buy Apple here. But you are talking about a stock that's trading at 9 times sales, and we've seen revenue slowing. So it's just $3.5 trillion company trading at 30 times earnings, a 2.2 PEG ratio, 9 times sales. That's just not cheap at all. And I think they've done a terrible job managing their balance sheet. They've spent hundreds of billions of dollars on share buybacks and dividends. They could have acquired companies that were in different areas. They could have entered the video space way sooner than they did. And they could have not released the Apple Vision Pro. So yeah, I would avoid Apple here. Which sounds weird because historically you want to own Apple going into September. So it's like it tends to be a good month for the stock's performance. But the thing to watch, I would say, is how is this iPhone event received? Because those tend to be sell the news kind of events if there isn't some amazing thing there. And from what I've heard and what I've read, Vision Pro was like their big, hey, this is our new product thing, and it kind of fell flat on its face. The thing that I don't understand is for much of this run in Apple in the last 10 years was predicated on an Apple car. And that Apple car project has either completely disappeared or it was never going to happen. But the capital appreciation of the stock did not reverse. So that seems weird. And yeah, I would avoid Apple as a result. I own it in my retirement account at a way lower valuation, but like, I just want to know who these brave people buying Apple at a $3.5 trillion valuation are and if they're okay. Other thing to note, it's not heavily shorted. It's only 0.8% short on Apple. So this idea of a short squeeze is not present in a company like Apple. It used to be a long time ago in a galaxy very far away. Let's see. Yeah, Apple, Amazon, you know, I wouldn't, let's problem with Amazon, I don't think it's ever been cheap. Like, it doesn't look like a stock that's ever cheap. It's always trading at a premium valuation. So yeah, 37 times forward earnings, 2 PEG ratio, 41 times trailing earnings, a $1.8 trillion company with price to sales of 3 and a price to book of 7. So a little more reasonable on the price to book. But yeah, you're talking about a company with $89 billion of cash, $157 billion of debt, $1.8 trillion market cap, not shorted at all. Yeah, I wouldn't buy Amazon here. I wouldn't buy Amazon here. I wouldn't buy Microsoft here. I think Microsoft, if it gets to trade at a premium because of its AI efforts, I do think that Microsoft could go higher. But it seems like some of the momentum is out of these AI stocks right now, and we just have to keep our eye on them because so many of the large components of the Nasdaq 100 are AI companies, and if let's ignoring the validity of what they're claiming they can do or the ethical consequences of it, just about profitability. If these things aren't profitable, I think you have companies that are basically saying we're going to lose money on this for years. And I don't know if that's being priced into some of these stocks yet, because they're spending a lot of money and they're not going to get a return for years. So something to watch on a company like Microsoft, for instance. But yeah, like I don't want to buy Microsoft. I don't want to buy Apple. I don't want to buy Amazon. I definitely don't want to buy Google with the government looking at them pretty intensely. I do want to point out that Google does have an inside year. So this person just came into our chat and dropped a link to their, I don't know. That's interesting. This person gave me one bit. Was that a penny? To try to promote a URL in our Twitch chat. Anyway, I don't know if I should ban them because they gave me money. But then again, they only gave me a penny. Chat, let me know if I should ban this person or not. He seems mostly harmless. Anyway, Google has an inside year and up buy signal above 142 and 68 cents, which was last year's high. So that would be the level to watch going into the end of the year, because it could be setting up for a reversal to the downside. Out of all of the big tech stocks, this is the one that I'm like, I might actually short it, because they're actively killing their website. I don't know. Maybe this is inside baseball for people who don't really know much about web publishing, but the internet's really in a tough space right now. We just saw Inantech just announced that they're shuttering after 27 years. And I love that website. They've done amazing work for a really long time. Some of the best benchmarking of technology products dating back to like the 90s. I saw something like they started at 233 megahertz processors, and they're ending somewhere in like the 5.7 gigahertz area or something. Let me see if I can find that. Yeah, it was 233 megahertz to 5.7 gigahertz in the time that they were reviewing and benchmarking processors. So I salute everyone over there at Inantech. But yeah, this stuff is happening because Google is actively ruining their own algorithm. Calypso Studio gave me $1. Okay, now we're cooking with fire. Appreciate it. You get to live. Who didn't have a 233 megahertz CPU, man? Those are the days. Intel Inside or an ATI processor. Sorry, AMD. See, this is the problem now. My tea has cooled. It's no longer that perfect drinking temperature. And like lukewarm, not even lukewarm, like room temperature green tea, nah. Ice green tea, down. Hot green tea, also down. But this lukewarm, I don't know. I did some damage to it though, so I'm not mad. But it's hard. It's hard to do a stream where you're the only person there and you have this delicious cup of tea that you're trying to drink simultaneously. So anyway. Yeah, there's also Meta. That's another one. So Meta is trading at a $1.3 trillion valuation. 25 times forward earnings, only a 1 peg ratio. They're actually cheaper than most of these other companies. But the problem with Meta is that they are actively spending on losing propositions. They're still heavily invested in VR. It has not worked. And now they're spending billions on training their LLM project. I do think that what they're doing with the open source development of their AI tech stack is kind of cool and very un-Facebook of them. So maybe they will have something down the road, but they're saying like we're going to spend billions of dollars too, and it's going to take forever. And in the meantime, they are dominating the display ad industry. But yeah, I would rather own Meta here than than Google, which is crazy to say. I would never say that in the past. Yeah, and you can follow us on all those socials, including Facebook, where Shaq News does very well. Anyone who's been listening to me for a while knows that that's insane. But yeah, like our Facebook, what was it? Over, yeah, there it is. That one. Yes, right there. Right there. Yeah, does really well. It does very well for us. Reaching millions of people every month. Weird, very weird stuff. But yeah, I think that Meta has a tailwind because Elon Musk is destroying their only competitor. Like, no advertiser in their right mind is advertising on Twitter, currently called X. But people are advertising on YouTube, and they're advertising on Snapchat, and they're advertising on Facebook properties. So, Facebook. I don't even want to call them Meta. It's a stupid name, but like, they're still doing pretty well over there. Although Mark Zuckerberg has been selling the stock aggressively all year long. And that usually begets some sort of a downside. Let me see if I can find... Is there insiders? Where are the insiders? Insider transactions. Yeah, just yesterday, Mark Zuckerberg sold $4 million worth of Facebook stock. He sold $5 million the day before. He sold another $8 million on the 26th, and almost $9 million worth of Facebook was sold on the 23rd. So basically, whenever it's legal for him to sell shares, he is. I don't know if it's because he has some sort of great subterranean billionaire bunker that he's building or what. But last time he was doing this, the stock did collapse quite a bit. I can go back in time and show you, but it was 2021 when the stock was around 400 a share. He was dumping it, and it crashed about 60% from there. Actually, more than that, almost 70%. And then he stopped selling, and then the stock went from 100 all the way up to where it is now. So I just think, maybe keep our eye on this uptrend. This thing could probably get to like 600 before I would consider shorting it. And like I said, just on a valuation basis, I don't think it makes much sense to short them here, which is strange. Microsoft's also trading at a 30 PE on forward. That's 2 times their growth rate, and they're trading at almost 13 times sales. That's not cheap. I would not invest in them. And this chart looks pretty damn scary. I'll be honest with you. This could be a world of pain forming here. And I'm not one to talk about Head and Shoulders. That's a shampoo. But this is a... The further we go out on the timeline, it'll become kind of apparent. Let's see. It's probably a quarterly thing that we're looking at here. So yeah, you got an outside quarter. We'll see how it ends September and then see where it goes from there. But on a technical standpoint, I would be quite concerned. But yeah, you have a continuation of this inside year and up buy signal from last year when it got above 213.43. But you're talking about a stock that's almost $100 higher than that now. And the year is running out. So we'll see what happens. But I'm not interested in investing in them. Nvidia is actually quite interesting. I do own shares. I did not buy any shares this week, but they're the fastest growing company to ever hit this size, in my opinion. You're talking about nearly triple digit revenue growth, and they're trading at 30 times sales, which is high. 44 times forward earnings for a company that's growing earnings at like 80% year over year. That's not expensive. 1.3 PEG ratio according to Yahoo. That's not, compared to some of these other ones, that's not that crazy. It did bump its head on that $3 trillion valuation. And yeah, on a price to sales basis right now, it may look expensive, but we're talking about a company that is, when I was saying all these companies are spending money on AI capital expenditures, most of the money's going to Nvidia. They had $30 billion of revenue reported in the quarter. 26 billion out of the 30 billion, that was all data center. And a lot of it was driven by what they call accelerated computing and also these LLM training facilities and, those server farms that we're seeing. So yeah, Nvidia is the one that I do own, that I would buy on weakness kind of thing. But when the music stops in AI, I don't know when that's happening, but if and when the music stops in AI development, they're going to get hit, just like they did when crypto mining boom and bust happened, just like in the past when they were, they had the Tegra processor that people were using in mobile devices. Like, Nvidia is very good at pitching themselves as the blank thing. So whenever there's a new trend, their CEO does a very good job of spinning the company to be that thing. But they are a pretty diversified company. So they're working on computer vision still. They're working on autonomous driving computers, and they do a lot of interesting stuff over there. They're diversified as all hell. But it's interesting, especially, we're a gaming website here at Shacknews, to see Nvidia now where gaming is like 10% of revenue. That's pretty interesting. It is a neat company. But yeah, I think they're the one among that magnificent seven or whatever Jim Cramer calls them. Tesla chart was bad. Tesla chart bad. Tesla trades at 90 times forward earnings. That's a 4 PEG ratio because they're slowing. Their earnings are slowing rapidly. They're trading at 7 times sales, 9.9 times book value, $650 million. I guess billion dollars. They're no longer a $1 trillion company. And the short interest is very low. It's only 2.9% short interest. So the days of Tesla being a short squeeze candidate are very much over. This is now it's a stock that's driven by fundamentals, and it's also a brand that is being tarnished by their idiot CEO. So that is a pretty defined downtrend that we see here, and it's tried to bounce above it a few times. We'll see what happens. I would not invest in Tesla at the current valuation. So those are some of the charts we were looking at. I don't know. Is there anything else from the thread that people were asking? Or let's see. Someone said the stock market is looking good. Let's see what that means. What does he mean by that? Wow, this looks a lot like that Netflix chart, doesn't it? Huh. So we had an outside day in the S&P 500. So that means you want to buy the S&P above today's high of 56, 50, 51 and 37 cents, and you would sell it only on the day. So this would only be valuable on Tuesday, below 55.81 and 79 cents. That's a daily outside day bar. There's the weekly chart. Let's see, monthly. That's a hammer on the month. So it puked all the way down here when the Japanese market crashed, and now we're seeing it all the way back up here. So once again, you want to buy it above this month's high of 56, 51, and 62 cents. On the quarter, still cooking. On the year, the S&P 500 has a yearly buy signal above 47.93 and 30 cents, which was last year's high. So you see 2023 traded inside of 2022's range, and then we broke out above this range and kind of haven't looked back since. So that's why you want to look. That's why you want to look for days where time frame continuity appears in the S&P 500, because if it's up on all these different time, it's actually up on all these different time frames. It means that shorts are getting their asses kicked, and you can always go back to this signal. So you're looking for a confirmation of this signal. So I gave you that daily signal, right? So a breakout above this high of the day, I think would lead to more people pouring into it. So I don't know if it looks good or bad. I don't want to judge what the market looks like, but we have evidence that it's probably going to go higher if something doesn't go terribly wrong. So yeah, the S&P does not look bad. I don't really look at the Dow Jones because it's full of crap I don't really care about. Oh yeah, here's another one of those turds I was talking about. Corsair. They're trading at $7. This one's interesting. I don't own it currently. I've held it in the past and I've lost money on it, so I'm not the hammer when it comes to this or anything. But I think it's interesting for a technology company to be trading at 1.1 times book value and also at a discount to their sales. Their market cap is $738 million. They have revenues per year of around $1.5 billion. I think that's kind of interesting. But why are they trading at this, right? They have negative profit margins. That's not good. And their revenue has really fallen off a cliff. Like down 30% year over year. So the real question is, like, can they turn it around? Like, is this just a cyclical nature of PC demand? Or, is this that overcorrection from the pandemic demand? Because, you're talking about a stock that in 2021 was trading at, what, $51, and it's currently at $7. So it's just another one of those fallen angels. I love Corsair, man. The computer I'm talking to you on right now has a Corsair case and Corsair RAM in it. Yeah. I think Corsair makes great products. They have made some acquisitions that maybe weren't the best. Oh yeah, power supplies are solid. I don't know. I don't use their fans that much. I have a bunch of Noctua fans. And then in my most recent builds, I did liquid cooling, which is pretty snazzy. I think I actually have a liquid cooled. My liquid cooler is a Corsair cooler. But yeah, I love their products, but that stock looks terrible, right? Something that I've been watching though. And the bad news for the idea of a short squeeze is that the shorts are covering. Maybe that's actually a good sign for the stock, because this used to be a 20% short interest, and now we're sitting at around 6.5% short. Maybe that's a sign that the shorts are done beating up this stock. But yeah, there's a lot of these like 2021 stock market darlings that have fallen from grace, and I don't necessarily think today's the day or anything, but it's undeniable that these are all cheaper than they were when everyone was falling over to invest in them. I said GoPro, Corsair, iRobot, and what was the other one? Teladoc. Very similar looking charts, all in a world of hurt. Yeah, let's look at some sectors while we're here. This is the semiconductor ETF. Outside week outside month broke down below it, but then we closed back inside of it. So now we have to watch. Are we going to try to test the higher side of this? Basically, whenever an outside bar occurs, you have an instant broadening formation. So you know, okay, here's a downtrend, here's an uptrend. So let's see if we can get above this month's high of 253 and 32 cents. You'll have a buy signal for the rest of the month, and then we'll see if it can test this 290 area. Be interesting to watch. So this is an ETF that like contains Intel and Taiwan Semi and Nvidia and AMD and all those semiconductor companies. So if you don't want the individual stock risk, you can buy something like this. I would avoid it because I don't want to own Intel. You know who doesn't? You know who else doesn't want to own Intel? Intel doesn't want to own Intel. They hired Morgan Stanley and a couple other companies to look at strategic alternatives. So they may be selling off part of their foundry. I'm guessing the McAfee acquisition is going to be spun off because that was a terrible idea. They also have Mobileye. So it's really interesting. Like their best idea right now is to have a going out of business sale in their parking lot. So we'll see what happens. But talk about fall from grace here. That is an ugly looking chart. Also a stock that never reached its previous all-time high during the original tech bubble. So yeah, I would still avoid Intel. You got stocks like Taiwan Semi, though, that you could invest in. They basically make everything for everyone. Texas Instruments is a better company than Intel now. Obviously, we still have we still have AMD out here. Where's AMD? There it is. There's better stocks out there than Intel still, but interesting that they are looking into I don't know. They just said strategic alternatives, but like usually when someone says that, it implies they're going to try to get acquired, but like who the hell would acquire Intel? And why? Really interesting though. Going into today, it was up 10% today on that news, but like it's trading at like 0.75 times book value, which historically is the level at which I kind of try to scoop up some shares. But what I've learned from past value traps is that if a company's not profitable, you have to impair their book value, or else you're going to be looking backwards. You have to factor in this company's going to lose more money. So what is the liquidation value if they keep losing money? And I think that's a mistake that a lot of people who just glance at book value will make. Also, I pointed out that book value is not really that great of a way to measure technology companies' value. But in the case of Intel, it's kind of interesting that their brand has no kind of premium being attached to it right now. But yeah, they trade at 1.5 times sales, 0.75 times book, less than 2 PEG ratio. But they're not growing. They reported a surprise loss last quarter. I would avoid it still. But interesting times in the semiconductor space for sure. I think that semiconductors are now like oil. They're like a commodity. I know that they're high tech and the processes involved are very high tech, but like these are monstrous companies that kind of remind me of the oil and gas integrated giants of the mid 2000s that led to the 08 bubble. I feel like the semiconductors will be that, but for this era. Although, like, there were times back in 2008 where you're like, oh, why was the stock market down? And it's like, oh, it's because oil was up. Or why was the stock market up? Oh, it was because oil was down. That negative correlation to commodities has completely gone away. So I find that a little interesting. What other sectors should we look at? Financial sector. Gee, I'm glad we bailed these guys out. Whatever could we have done? This is where we bailed out the banks, by the way. The XLF was trading around 10. It's at 45.70 now. Obviously, you got like JP Morgan, Goldman Sachs, Morgan Stanley, Bank of America. Bank of America has been getting sold by Warren Buffett pretty hard. Yeah, you know what? Why is Warren Buffett raising so much cash? Have you guys been wondering that? I've been wondering that. The company has I think it's like $288 billion of cash right now. And I read that they hold more T-bills, the 30-day treasury bills. They own more of them than the U.S. government does. Or the Federal Reserve, sorry. So that's pretty wild. But when the greatest investor of all time becomes overly cautious, I have to take note. That's not how he usually behaves. He's one of those buy and hold forever kind of guys. So when he's going to raise cash, it makes me wonder, should I be doing the same thing? So I have been looking at my portfolio just from a risk management standpoint. And over time, I may trim some of my positions again in the interest of creating liquidity so I can run Shack News, but also mainly to manage the risk on the portfolio. I don't know if there's so few stocks that I would hold. So I guess I should talk about the stock that I hold. Nintendo. It's a cereal now. That's a wild looking monthly chart because the Japanese stock market did crash in this month, but what a rebound to basically close the month flat, 1360. Nothing really to call out on the year. Outside quarter is cooking, so at the end of this month we'll have something to look at there. Sorry, at the end of September. The daily inside day, so we'll have to watch that. We had an inside day and a failed attempt to reverse it back up. So we'll see what happens here. But no imminent outside of this daily inside day thing, but that's if you want to trade this on Tuesday. I don't recommend trading Nintendo at all, but if you were to trade it on Tuesday, below 1352 would be a sell and above 1371 would be a buy. It really feels to me like shareholders are just waiting for Switch 2 to be revealed. No one is selling, no one's buying, we're just kind of waiting. And we might be waiting for a few more months. Let's see, anything else? Any questions from the chat? No. Let's see, are there any other... Let's look at the transports. Dow Jones Transports had a hammer on the month, so you want to watch above... Closed on the high. So you want to watch above 67.38 on the transports. This is an interesting thing to watch because there's this Dow theory that the transports will peak before the Dow Jones will. But there's a chance that we're going to see a breakout here in the next month. Nope, no other questions. Nothing. I don't know. Maybe this is a short episode week because I don't really have much else to say. I guess I could talk about CEOs and how they ruin their companies. This is GameStop. GameStop ends the month with a hammer up. It would be a buy signal above 23.91, which was the high of today. Still inside quarter because that was a huge ass range that it's kind of sitting inside of. Outside weak to the upside. Very big move on the day on 16 million shares. And then the yearly chart, there's a buy signal above 27.65, so they're about $4.15 away from that. But this CEO is an idiot. The CEO of GameStop is a moron, and he says stupid things. He tweets stupid things, just like his buddy Elon. But I'd say, I don't know. It's hard to take it's hard to take this CEO seriously. When he has a avatar like that, where he's clearly making fun of the transgender community in his profile picture. He's still obsessed with talking about Biden. And yeah, he's an idiot because if you're tweeting in the middle of the night about trying to hire product and graphic designers, you're fucked. He had this racist tweet about how Kamala Harris is grande iced mocha and Trump is Americano. He tweeted out that Kamala 2069 and also just repeatedly said Trump over and over and over and over again. So yeah, I don't know why is he trending. This is probably going to be a dangerous game. Yeah, no actual news. But yeah, I think shame on him for the things that he's said, the way he's behaving, and how they shut down Game Informer, I think was ridiculous. So yeah, that's just one example of how a CEO can ruin a company. And I think he's well on his way to doing that. It's like Elon, but maybe a few months behind. So we'll see what happens to GameStop. I think that's it, though. I don't really have anything else to say. When it comes to Nintendo, you just have to watch for whenever they announce the Switch 2, which I don't think they're going to do it this year. I think this year's about the Switch. What I'm waiting to hear is, like, are they going to do a maybe a price drop or like a, maybe some kind of aggressive bundle for the thing, because they claim they're going to sell 13.5 million Switches this fiscal year. So far, they've only sold 2.1 million. So we'll see. My guess is that they will reveal the Switch 2 in January of next year. So I'll do it. I don't want to do the thought experiment about opportunity cost of me buying my stupid Roadster. But just know that I'm still upset that I bought the Tesla Roadster. Appreciate it. I will, you know what? Before we go, I do want to shout out our game that we built. It is called Bubbletron, and we could maybe play it real quick before I go. Bam.
I am Bubbletron.
Sorry, that came through the mic. Bubbletron is free to play, and what's nice about this is you can't actually lose real money. So the idea is to combine 3 ideas, try to hit the high valuation of the day and the low valuation of the day. So let's do an age-restricted private prison for men. Damn. Pretty low, 19,830, but it's not the low valuation. Let's see. What would be worse than that? Maybe brick and mortar? Brick and mortar. I mean, aren't all private prisons brick and mortar? Yep, I got it. Well, there you have it. There's your, I'm not going to use my regular initials here because, yeah, I'm on the leaderboard. So that's the low valuation. Let's see if I can hit the high valuation too before I get out of here. The AI chatbot. Amusement park. Sex robot. Bam! First try. Head on over to the leaderboard. Submit again. Bam. And there you have it. I just gave you a cheat sheet for today's Bubbletron solutions. But yeah, it's free to play at bubbletron.com. Check it out. Shacknews doesn't really run any ads, so we're basically just building stuff next door to our website to see if any of them actually can take off and subsidize the cost of running our website. So this is one of those projects. We have an update that we're working on for it that'll probably ship here in the next month or so. But yeah, wanted to shout it out before we ended the stream. So yeah, thanks for watching. If you were watching on YouTube, thank you for watching after the stream. If you want to catch these live, they're going to be on twitch.tv/shacknews the last trading day of the month. So it doesn't matter what day we're talking about. It's going to be a weekday, but sometimes the end of the month happens in the middle of the week, so we'll air our episodes then. Sometimes they're on a Friday, like today, so we did this today. But yeah, that's it. I always want to leave people with a message: just manage your risk. Define your risk tolerance. Understand what you're risking. And hope is not an investment strategy. I see a lot of people talking about hoping this happens and hoping that happens. That's not an investment strategy. I'm sorry. But yeah, manage your risk. Please, for the love of God. And maybe ask yourself, why is Warren Buffett raising so much cash? And maybe should I do the same thing? With that, I'm going to head out. We have Sam Chandler coming up here in less than an hour. He'll be streaming some Black Myth Wukong. So it's going to be a bit of a switch from talking about stocks. But thanks for watching, everybody. This will be on our Shacknews YouTube channel later today. And yeah. See you later.